Yo, what's up guys? So for today's video, I'm going to discuss what is a risk management. Okay, so what is a risk management? Just like in business, risk management is just a skill or technique they use on how they can control their losses and how they can maximize their profit. So how can we apply this risk management in trading? So if we have risk management in trading, we can also control our losses and also we can maximize our profit. So these are the four things that we should understand on how we can do this risk management. So number one, we have our account size or our capital. Number two is risk tolerance. Number three, we should understand also what is a pip or the percentage in point. And number four, the most what do you call important thing is on how we could use this position sizing in our trades. Okay. Okay, so let's go through this one by one. So number one, what is this account size? So account size simply refers to the total amount of capital or money that a trader has deposited into the trading account with a Forex broker. Okay, let's say for example, we have an account size of $1,000. So this will be our account size. So let's go to number two, risk tolerance. Risk tolerance is just how much percentage of our capital are we going to lose per trade. So let's say for example, we are willing to lose 1 to 3% of our capital only if we lose per trade. So let's get the 1 to or to 1 is to 1 to 3% of this 1,000. So that would be 10 to $30 to $30. So this is the amount of money we are willing to risk per trade only. Okay. Number three, pip or percentage in point. So what is a pip or percentage in point? So basically, it is just a unit of measurement used to express the change in value between two currencies. So pips are typically used to measure price movements in the forex market. So the majority currency pairs are quoted with four decimal places. In these cases, a pip is equivalent to 0.001. So let's have an example. For example, my favorite pair, Euro USD. So for example, we have the price of Euro USD is 1.021. This is just an example only. Okay, so this is so if so if the price moves, for example, to 1.0211, so we can say that looking at this fourth decimal places, fourth decimal place, from 1.0210, it increases into 1 pip. It has moved 1 pip from 1.0210 to 1.0211. Okay, so that's how we get our pip. However, for currency pairs involving JPY, pips are usually quoted with two decimal places because the yen is a currency with a higher value. So like for example, in a USD JPY. Let's say for example, our price in USD JPY is 110.50. 0.50. So in this JPY. Just like I said, in JPY pairs, just two decimal places. So if the new price moves to let's say 110.49, so it decrease to 1 pip. Okay? So do you understand what is a pip already? So and for the last thing is this position sizing. Okay, so let's go to the last part of our risk management. So the last part will be the position sizing. So actually, position sizing in forex trading refers to the process of determining the amount of capital or risk that you allocate to a specific trade or position. Okay, so how do I get my position sizing? Let me show you how do I get it. So let's just say, for example, this trade here. So let me show you my, you call this, my journal or dashboard that I am using. So here, as you can see here, for example, this is I made in Excel, Excel file. So this is my challenge before, the $100 challenge for me, but I'm not using it anymore. So you can see here, you have here the date, the win and the losses. This is my journal. As you can see here, my most traded pair, Euro USD. So let's have here an example. This is how I get my position sizing. So let's say we have, let's remove this one. So we have a let's say $1,000. Okay, so for me, let's say we have this trade here. Let's move this one. So looking at this trade, so our entry price is this 1.06300. Okay, so I'm copying this and putting this to our P&L calculator. This is how I do my position sizing. So let's say we are gonna buy. So actually this P&L calculator, we can see a lot of this. We can search this in via Google. But for me, I made this one since I'm just trading Euro USD and GBP USD. So I just made this P&L calculator in Excel. So the first thing I do is I copy my entry price. I put it here in our open price. Okay, so and then the next thing is this stop level or the stop loss. I put this in our closing price. So as you can see here, the number of pips shows is -10. So we have a -10. And then on how I calculate my loss is this lot size. So let's say um, our risk tolerance only is 1 to 3%. Okay, so we just adjust our lot size based on the number of pips of our stop loss. So for example, we are looking for a profit or loss at around $10 or $30. So let's say 0.1 lot. So that's exactly 10 -$10. Okay. So let's say 3, 0.3. So that will be our risk if we lost the trade, -$30. Okay. So let's say, for example, we win this trade. So we can calculate our gain. So we copy our profit level price and put it in the closing price. So as we can see here, we have 40 pips and our profit is $120 for 3 lots. So for example, for this trade, I use 1 lot. So I gain $400 in this trade. Okay, so let's take another example here. So this is for a sell. Let's copy this entry price. Let's move here. just copying this entry price and putting it in. So this is a sell. Opening price. And then we base our risk on our stop level. Okay, so as you can see here, we have negative 4 pips. That's 4 pips only. And then our lot size used is 1. So we will be reducing this to 0.1, for example. So we are only risking zero point 0.4. But I said $1,000 is 1% of $1,000 is $10. So we can go higher lot. Let's say 5. So that's 20. Let's say 25.25. So there you go. We can calculate our profit and loss. So that's how I do my position sizing. So as you can see here, we have 1,000 database. So for example, we win this $10. So win. So it will reflect automatically to my balance here. And we can see here overview. So let's say, for example, on the second day, we have lost 30 again. So there you go. Then look at the overview. We can see here this change in balance. Okay, so that's all for today, and I hope you've learned on how we can do this risk management on our daily trades. And please subscribe and see you on the next video.